Welcome, everybody. Happy Sunday. This is the Trader Circle, April 13, 2025. For those who are new here, my name is Advent or Desi, depending where you know me from. I am still working on my introduction, so bear with me. For those who are new to this class, what we pretty much just do here is this like a group coaching session. So whatever you guys want to ask me, I'm all ears. Whatever you want to go over, whether that's, strategy, psychology, pretty much anything. I'll help you out with it. Nothing such as a stupid question. So anything that you guys want to go over or ask, it's okay. There's no judgment. We're all here to learn and improve together. With that being said, you guys can put some stuff in the chat and I will bring up the questionnaire. And as always, thank you guys for letting me know what you want to go over in the questionnaire so I'm ready when we actually do start this. Let me move this over. I'll keep that there. All right, cool. Let's see. Let me actually put this in the group so people know we started a little early. I'm surprised. Nobody has questions apparently. Lucky, when you are signing up for the class, it's gonna ask you like, what do you want to go over in this session? And it'll give you the uh option to write anything in there.
Okay, sounds good. I probably filled it out and just forgot. So,
I'm sure I have it here. Let's see. Luckner, right?
yeah, that's right.
You definitely did fill it out. Let me bring it up. I think you were like the one of the first ones to sign up, like maybe a month and a half ago. So that would definitely make sense.
Yeah, that's probably why I forgot.
Sweet. We can definitely start with that. So what you asked was you wanted to go over being patient and waiting for setups and stopping or stop trying to immediately make back losses. Tell me more about that. Like, what exactly is going on with your patients?
Yeah, I feel like I've been back testing since August when I started looking into futures trading. I feel like all I've been doing is back testing. So like I know that like some days will be red, some weeks will be red, but in the grand scheme of things, I'll be green. Um, but I think when it comes to execution time, I I was actually sitting down last week and just spending some time thinking. I feel like as soon as I open my chart, I'm looking for a trade. Um, I think there's just need to be in a trade. Um, and so I've really tried to refine refine my system so that like it's as mechanical as possible. There's no, I think price is going to go this way. I have a feeling of X, Y, Z. It's fair. Do I see it? Do I not see it? That's it. That's all. Then it just comes to executing on that. And so, um, yeah, I just feel like there's something that's just not clicking when it comes to being patient and waiting for setups. And, some days there won't be a 15-minute setup. There will be a 5-minute setup, but there just won't be anything on the 15. And so I've also tried to force myself to not time frame hop. That's something I've been very guilty of. And I started trading the 2-minute. I had to stop trading the 2-minute because it was just as much as it helps eliminate the noise of the 1 minute, it was still too much. There's just too many signals and too many trade opportunities, and it just led to over trading. So I've been trying to move towards the 15-minute instead, accepting that some days won't have trades depending on the price movement, but um, any kind of suggestions around kind of being patient and just waiting for setups would definitely be helpful.
100%. Question for you is, do you have your setups like clearly defined? Like, do you know exactly what you're looking for and things like that?
Yeah, so I had them. I'm actually in the process right now of rewriting my entire trading plan,
Hmm.
especially because I'm moving to a different time frame. I've eliminated some of the signals that I used to look for, to just kind of look for two things instead of two, three, or four things. So I'm really trying to streamline all of that. But I can verbalize it. I just don't have it written out at the moment because I'm reworking it.
Gotcha. And are you paper trading or like live trading now?
I'm live trading prop firms.
Gotcha. Personally, what I would say is if you are um like still working on getting your system down packed and like your setups and things like that, I would definitely recommend not even taking anything live, even if it is prop, because you don't even have the proper foundation to be trading efficiently, in my
Mhm.
opinion, from what you said so far. So, like for example, this is my playbook and the setups that I look for. Somebody was, I think this morning when we were going over the watch list, somebody was asking me a similar question to you, like, what can help with um, being more patient, taking like your setups, like avoiding over trading and things like that, right? Of course, the first step is really going to be clear on exactly what it is that you're going to be looking for. So let's say, for the sake of conversation, um, I have a reversal trade here, the W model, right? And let's go back to the chart so we can find one. Let's just say this one over here. Not the cleanest, but we'll accept it as an example. This one right over here. So the W's to me, basically just a double bottom. I just call it the W because that's what it looks like. Um, Pretty straightforward. There's only, I guess, technically three steps, four steps for the entry. So all I'm going to look for is a low of day to be made from market open, a retracement back up, and it comes back down. Instead of breaking the low and, the structure remains bearish, what I'm going to be looking for is a higher low, and then we get a reversal back to the upside, right? So, um, give me one sec. I have to bring people in. So I'm going to be looking for the higher low, and then I'm going to take the first bullish reversal back to the upside. So it's super clear, right? So I'm going to be looking for these three different things: low from market open, step one; step two, the retracing back up, making the center of it. And instead of making a new low, as if we're going to continue bearish, it makes a higher low right here. And then I'm going to get in on the first bullish reversal, which is right here. So pretty straightforward. I can't front run this move even if I wanted to because I need that criteria to be present, right? If it's not there, then I literally can't do anything. So being super clear on your setup and what you need to be presented to take it will help a lot, as well as understanding which specific time frames you're going to be taking for these trades, right? So this specific one, I only look for it on the 5 and 15 minute. Some people that I've taught it to look for it on the 2 minute as well. I just don't have data on the 2 minute to see how successful it can be. I just prefer it on the 5 and 15 minute. So that's one thing that can help. Another thing,
Mhm.
as always, is understanding that we're not here to take every single trade. We're
Mhm.
just
Yeah.
here to take our best ones. It's better to just take, let's say, if you take 10 trades, take 10 solid trades than five okay trades, two solid trades, and like three or four poor ones. You're kind of just shooting yourself in the foot at that point. So, getting very specific criteria would help a lot, I would say.
Yeah.
Making sense so far?
Yeah, absolutely.
Cool. So, what I would probably do in your shoes is before you continue with the props and stuff, just so you don't either blow them or lose money or what have you. Spend a day or two or three or even a week if you need to, just getting super clear on exactly what criteria you need for the setup, and what to avoid, what to look for, the specific time frames to be on, so on and so forth. Like this is pretty much my setup. Um, when I'm trading. I have the 5 and 15 minute up here with regular trading hours, and then the 30-minute and the 1 hour on the bottom right. And then I'll just mark off the 4 hour level so I don't need to look at that time frame because I already know if it's above this level, we're bullish, or below, we're bearish, so on and so forth on that time frame. So
Okay.
just keep it simple, don't overcomplicate it, and I think you'll do fine.
Yeah, thank you. Yeah, this thing is just, I think when you spend so much time studying and everything, there's just information overload and you just start seeing everything on the chart, like, oh, I remember this, I remember that, I remember this. And then I need to just like forget as much as possible and just stick to my stuff.
I know exactly what you mean because I started off trading like with EMAs and indicators, all that other stuff. And I'm like, all right, let me keep this on. And then, but then there's this and then there's that. But it's like, let me make it as simple as I can for myself.
Hmm.
EMAs and stuff, I don't really use them because they just confuse me personally. Some people, they love them and it works for them. Hey, keep on doing it. But really, trading when it comes to strategy, just making it simple or as simple as you can when it comes to whatever it may be for you.
Hmm. No, thank
And you also mentioned like trying to make back your losses.
you. Yeah.
When it comes to making back your losses, what's kind of like do you know like why you tend to do that?
I think it's a byproduct of I was trying to shoot for 1-to-1 because of the high probability of it hitting, but also, a loss means you lost that initial win that you had, so you're back to zero, which is fine, obviously. But I think a lot of the prop firm rules have also just had a psychological impact, and so always, shooting for $200 days and stuff like that. And so um I feel like I've always felt the need to end green, or, I was at a certain point and get back to that point. So just to kind of, since I signed up for the class, I've moved to aiming for 1.5 and protecting once we get close to 1-to-1,
Mhm.
accepting if it doesn't go to 1.5. But at least psychologically, I know that like my winners will kind of cover for my losers. And so, over time, that will kind of make me okay. 1-to-1 can work, especially because I do try to protect. It's in my plan to protect pretty aggressively, but 1.5 has been kind of the sweet spot based on
Nice.
my testing.
Yeah, I would say do your best, of course, because the prop firms are always going to have like different things to kind of mess you up. Um, when it comes to your back testing, does that specific setup, whatever that may be, or actually, better question for you, when you're getting into these trades,
Mhm.
are you basing it off like price action? Like what's like give me an idea of what it may be, um like how you would take a trade. Like is it based on price action, like indicators lining up, or what specifically?
Yeah, well, my charts only have the 9 and 21 MA on them, mainly for direction. And then one of my setups, for example, is a pullback. So similar to a TTO, sometimes that actually ends up being a TTO, but not always.
Hmm.
It's essentially a specific candle pattern that forms a pullback. And I'll take that to the upside or to the downside. Another one of my setups is just a 50-minute orb on the ES. Very simple, but I only take it on gap days, for example. So um,
On what days?
gap days, on days where
Oh,
we
gotcha.
from during our TH.
I might consider that for mine when I take them. I usually take them regardless of what we have.
Yeah, I feel like it eliminates a lot of losers.
I would definitely say so. Because it's
Yeah,
like if it gaps up, then we're probably gonna keep on heading higher anyway.
yeah,
And the inside days can be a little tricky sometimes, depending
yeah.
on volume and stuff. I would say, yeah, just get super clear. When it comes back to making your losses, just try to change your viewpoint of them. You know, like a red day is a red day, right? You can't, it is what it is. You can't control that. You can only really control yourself.
Yeah,
And you don't want to get into the cycle of like, I got to make back these losses. Then you incur even more losses trying to get that back. Because the frame of mind needs to always be on the system, right? Or your plan. If you're going into it with saying, I need to get back these losses, then you're no longer trading your system anymore. You're trading your P&L. And trading your P&L isn't a strategy. It's kind of just gambling, in my opinion.
yeah, absolutely. Um, I think I'm working on just ignoring the prop firm rules and just kind of treating it as a cash account that I am growing slowly, and like when I'll kind of I'll get to the point of taking money out of it at some point. It may not be, in 2 weeks or 3 weeks, like you see constantly on Reddit and YouTube and all that crap. Pardon my language.
No, you're
Um,
good.
but yeah, just ignoring the $200 days, ignoring everything, literally treating it like a slightly over leveraged, $2,000 account essentially. Risking small and knowing that like in a couple months I'll be able to take money out, but not yet, and that's okay. Um, I think we just get caught up in the prop firm game too much, and then you just get tunnel vision, and then you're just constantly trying to shoot for payout days, and it's just there's a reason why I've had, two funded accounts and I've blown them because I'm like, finally made it. Now I'm finally ready to make money. And then you kind of push too hard and now you're back to square one.
Yeah, definitely always practice patience with them because just treat them as a real account, right? You know, your real account, you're probably not going to over leverage. And even with the volatility now, like one micro or even two micros can go a long way.
Yeah, that's especially these days,
100%. ATR is like doubled.
right?
Cool. You have me on Discord, right?
I believe so. Believe so. If not, then I'll definitely join, but I think I have joined.
Sweet. Just update me in a week or two with your progress.
Okay, we'll
And,
do
and
that.
as I always tell everybody here, you're every time I tell you to update me with your progress, I mean it. So my DM is open,
Thank you.
of course. All right, let's see. Uh, I'm reading your question now, Sam. You mentioned before you don't have data to trade the W setup on a lower time frame. How do you go about collecting the data? For me, that's the most boring slash tedious part. Is going back and visually looking over the charts at previous setups, collecting data, or is it more scientific? I'd say it's kind of like a mixture of both, right? So that's literally what I'll do. Like I'll go on the chart. I'll just like for example, for the 5 and 15 minute, I first started seeing those setups on the 5 and 15 minutes, so I kind of just stayed on those. I've seen them on other ones, just the times that I would take it on the lower time frame, it didn't really work, so I just bothered like stopping my research on that time frame. But it's pretty much as simple as that, right? So let's see. So we're on the 2 minute right now. There's a W right here, not the cleanest one, not one that I would personally prefer because I want the reversal to be a little lower. This one is a little too high because my first target is always going to be the center. And then, wherever the W completes, that could be there, 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 really depending on you and your discretion. But I generally want the first, like the entry and the first target to be a decent level, like the one, where is it? Like over here, right? Off this three up, your stop loss would be about 30 points. Your first target will either be 50, which is this body, or this wick, depending how adventurous you want to be. I would probably use the body because that huge wick is telling me there's a lot of selling pressure there, right? But you could use this as your first target too. I just wouldn't. And then my second target with like the completed W would be like up here at this high over there. So um, what you can do is get a sample. I usually do like at least 30 to 50 trades, usually 50. And then I kind of see like um, what the risk reward is on average. Of course, it's going to fluctuate because each setup is different points wise and volatility and things like that. So we can see here that the first target is 1.73, and then the second target would be 4.24 risk reward, right? So if you if you look at if you like get the 30, 50 trades or whatever, you can see, all right, on average, let's just say we take five different setups, whatever that may be. On average, the first target is usually 1.2 to 1.5, let's say. And then on average, the second target is usually 2.5 or up to 4 or 5 or whatever it may be the average. Now I have data on what the approximate risk reward is on each single trade. And you can go also go the extra mile and collect the data of like the stop losses, right? So I'd be like, all right, the stop on this one was about 30 points on ES. The first target was 50 points or what have you. If you want to be a little more specific, you could just open up like an Excel sheet. Let me see if I can find an example that I did for the 15-minute orb. Uh, B, to answer your question, yes, 50% of the first 15-minute candle is my stop loss. Let's see. When did I do this? There we go. Gotta switch my screen real quick. You guys can see the Discord, right?
Yes.
So just get an Excel sheet. I was doing this on YM, so using the 50% fib. Um, whatever's a win or whatever's the loss, that's basically whatever the stop loss or take. Then this is just 1 to 1. Where you see the 2.26 or 1.52, whatever, that's just the highest or lowest point before price reversed back up to kind of get an idea of what the average risk reward is or what have you. And then I just marked out the date. And then I just collected all the numbers here. And then I just put it into um, what website was it? I think it's like an average calculator. So then I just put like the average of how many times it won, how many times it lost, things like that. And then now I have an idea on average, this setup, when it prints, it usually gives this much. Granted, it's always fixed to whatever the 50% of the first 15-minute candle is. So it's always going to be different, but you can just size accordingly with micros to kind of keep the dollar amount the same. So if you want to lose 2 to 250 a trade, just use the specific micro sizes to account for that. Another thing that I would highly encourage you guys to do is take screenshots, right? Like any 15-minute orb, I'm not going to take. Like this one here, even though it looks like it probably won. Let's see, actually. So the stop loss would have been about what, 225, give or take. So yeah, this one would have won. It would have hit at least 225 in your favor, and then it reversed on you. I wouldn't have taken this one, even though it was a gap up. I prefer if I'm going to take it long for the candle to be a strong bullish candle. I don't really want to see selling pressure when it comes to the 15-minute candle. If I'm going to take that setup, for example, this was one on MYM the other day. Let's see. So this one right here, right? We didn't gap up or anything like that, but we have a strong bullish candle. We have barely a small wick on the bottom. We have buying pressure and then a nice solid body. This one I would take to the upside. I would not take it to the downside because the buying pressure there. So you always want to get screenshots to get clear on what the candles look like. So that way you can be like, all right, these are probably not good. This is probably better. This ones I should avoid, so on and so forth, to be super clear on um am I still sharing Discord? No, I'm sharing my chart. Cool. So we can be super clear on, which ones to look for, which ones to avoid, so on and so forth. Let me know if that made sense, Sam. Cool. The more data you can collect, the better. And I love data and information, so I collect maybe too much of it, but that's just what I enjoy. Cool. Let's see. Carmel asked, outside of only taking your trade setups, what are your best tips to keep the same mental state in your funded prop firm account as you had in the evaluation? Great question. For me, I kind of just go into it with everything being the same because whether it's a live account, funded account, prop account, you have to bring the same um, disciplines to it, right? There was something that Brown mentioned, what, yesterday? Yeah, I think it was yesterday in the chart and chill. When it comes to props, the way you got it is the way you're going to keep it. So if you got it by following your setups and your disciplines and so on and so forth, you pretty much do the same exact thing. Now, if you got it by over leveraging to just pass quickly, then you're building a bad habit of doing that, right? And then you're probably going to slip up a day and over leverage on the funded one, and then you're going to blow it up, and then you're going to be right back at square one. So, when it comes to sticking with the same mindset, it can be challenging if you get too excited of like, yes, I finally got the funded account, I can get paid out, and this like and this and this and that. Just before the trading session, just think of it as your regular account. Because when we have our regular accounts, there is no payout, right? There is no, um, what do you call it? There is no like payout rule or 5 days or 10 days or whatever, right? You're just trading. And if you make money that day, hey, you can take it out if you want to. You can take it out in a month if you want to, or in 2 months or whatever, right? So, of course, just do the best that you can to just follow that. As always, set up things in the platform that locks you out and don't remove the lockout because that kind of defeats the purpose of protecting you against yourself. Um, if you find yourself as well going into the trading day with a specific mentality, like if I do this today or do this today and tomorrow, then I'm going to get my payout. That's probably a day that you probably shouldn't trade because you're already starting off on the wrong foot. Your focus is on the money, not really on your system. You're focused on the payout, not on your disciplines in your system where the money is going to come from. Does that make sense? Sweet. And the biggest thing, as always, as I mentioned to you and others before, is you need to continue like building those good habits. If you lose, it is what it is. Take the loss, shut everything down, go about your day. Because the emotion's going to feel intense, right? Especially in the moment. We're going to be upset, we're going to be angry, whatever emotion it may be, but it's going to pass, right? Right now, I'm pretty sure you're not feeling anything. You're just hanging out. We're just talking, right? There's no intense emotion. Our mind is probably clear and things like that. Um, but in those moments, you have to really bring yourself back, right? Breathing practices, shutting down the charts, all that good stuff, just to slow the emotional process down and not stay in that emotional state or in that environment rather that's enticing you to make those mistakes or the thought process that you may be going through, like, oh, I got to get this money back, or I got to do this, or I got to do that. Any emotion is not good at all when we're trading, good or bad. So even for me, um, what was it? On Friday, I think I made like what 1350 or 1400. I was super hyped. I had, well, not this Friday, last Friday. I was super excited. I was like, cool, I made a good amount of money. Let me, I wanted to take more trades so bad, but I'm like, I already know what's going to happen if I stay here. So I shut everything down. I went for a walk for like 15, 20 minutes and went about my business because I knew for a fact if I stayed there, I would have taken another trade, guaranteed. I already know myself. So the biggest thing, as I always say as well, is knowing yourself. If you know that you're going to revenge trade and try to get that money back, just shut everything down. Or if you're using Top Step or other platforms, they have a lockout feature where it'll lock yourself out. For some others who may not have that, just shut everything down. But the sooner you can do that, the better. Because the more you sit there in that thought process, the more it's going to take a hold of you. And it's going to be a lot more challenging to get out of it. So the quicker you can uh, like be mindful that it's there, just do what you need to get off the screen, relax yourself, so on and so forth. And that's what helps me. Hope that helped. Oh, this is what I forgot to say. I go off on too many tangents sometimes. Um, while it is challenging, as you said, B, like it could be hard at times, you've basically been used to making mistakes a lot, right? So that comes easy. And it comes easy because you've been doing it a lot and you built that habit. The biggest thing is just building the opposite side, right? When you need to follow your rules, you need to follow them so you can slowly build up that discipline muscle over time. And it'll get easier over time. Last week, I ended red 2 days. Was I annoyed? Yeah, but I wasn't annoyed to the point where it would like have me make mistakes or do something silly. So again, this takes time. It's not going to be overnight that it happens. It gets easier, but you just need to stick with it until you're not affected as much. And it's not something, in my opinion and in my experience, I could be wrong. Again, this is just my experience. Even though it's easier for me now to take losses like nothing, I still do get upset, right? I'm human. But it's a lot easier than before. Like before, I would get upset. I'll look for another setup, or I'll even just get right back in, not even being my setup to get the loss back, right? So over time, it'll get easier where you just understand, hey, the market just wasn't for me today, or the setup just wasn't there for me, or I should have avoided X, Y, and Z, or whatever it is, to make it easier for you to manage your emotions. Because the goal isn't to get rid of them, because you can't do that. You're human. You might need to get rid of your amygdala. So, and I don't think that's doable. So, follow your rules as best you can, and you'll do fine. Luckner, you asked me managing my risk reward. One thing that I've been switching up, I used to take, let's say if I had, for the sake of the conversation, 10 micros, I would usually take 4 or 5 off at the first target and then 4 or 5 at the second target and then leave like two runners. I've kind of been doing like something like in reverse, where I would take 2 or 3 off at the first target. That way I can take 4 or 5 off at the second target. So when it hits my other take profits further away, I'm making more money than less. While the first trim is going to be not as much as before, I'm going to make more money overall when it hits my other targets. So you can look into that. And how do I manage news with the orb? If there's news coming out at 50, like at 9:45, I would just skip it because for me personally, it's never um, we should never be desperate enough to we should never be desperate enough to take. and be eager to take trades. There's always going to be more days, even if it did work in your favor. So I just avoid it. Cool. By the way, you guys can put questions in the chat. Let's see what else we got. Is Lay here? Lay is not here. Maya, she here? Uh, Later, Carmel. Give me an update in a week or two. You've been super quiet. Let's see who else. Akeem is not here. Simone, I don't think you're here unless your iPhone. David, you want to go over the brackets?
Yes, sir.
Cool. Let me bring up my chart up or my trade of eight. All right. Let's bring this up. Can you see my screen?
Yeah, I can see it.
All right, cool. Did you want to set up the like the brackets to have like multiple take profits so you can like scale out and stuff, or just like a generic or go over both?
We could go over both. Right now, I'll be doing just two micros. So I'm guessing like the first micro will be a take profit, and then the second one will be probably a trailing stop.
Cool. I hate trade of eight. All right, so we're on M2K. Let's just say you just have two. Let's bring this up. Whoops. Let's bring that up. So now we have two and two. Regular stop. You want to do an auto trail?
Yeah, auto trail,
Do you do auto break even as well, or do you want to like manually move up the stop loss?
auto break even.
Cool. So I just kind of keep them generic for the take profit and stop loss because if you're going to be taking strat setups, it's always going to be different. So let's do 80 and the stop loss is going to be the same. And then, so basically for the auto break even, which is the first set right here in the middle, let's say if you want to move up to break even after, I don't know, let's say 2 points. Well, actually, let's do 50 because the ATR is pretty high. All right, so let's say you want to move up to entry after 4 points in your favor. So your profit trigger is going to be 40. Well, you could do one tick below. For whatever reason, maybe they fixed it. I don't know. I haven't done it in a long time, but your profit trigger will always trigger 1 point after it hits that amount. So if you're up 40 like this, it's not going to trigger at 40. It's going to trigger like at 41. Why? I have no idea. So I just always do it like one tick below. Now, if I want to make this a winning trade, no matter what, the offset, I'm going to just do 5, which is 5 ticks. So if I got in at 4,000 and it goes up 4 points, it's going to move my stop loss to 4,000.5, pretty much up 5 ticks. So I don't lose money at all on the second set. Um, And then the stop loss, you could keep that the same at 40. And let's say you want it to start trailing every, well, actually, if you want to start trailing after 39 or the same thing, right? When it moves up to break even. And the frequency, how often do you want it to move up in your favor? If you want it to move up every point, you'll just do 10 ticks. If you want it to move up every 2 points, you'll do 20 ticks. Well, we have it in ticks here. So basically, the way this is set up is stop loss is going to be 5 points. Let's bring that up actually. So 50, and make sure that you always have it on. And I forgot to save it. I always like to save it with kind of like a description how many contracts in the set that I use. So here's one and one. So I'll use one and one here. We'll do, I don't know, auto break even, auto trail test, and you can name it whatever you want. So let's bring this up. What time frame is this? 5 minute. So let's say I want to go long above this candle here. For those who trade the strat, you always want to put the order, the buy or sell stop one tick above the actual entry because it will come and tag you right at the high of this candle and not break it. And then you'll be in a trade without a confirmation. So let's bring the data box. The high is 1876. So we'll do 1876.10. And I needed to show my lines on the chart. Whoops. See that? Order lines, trade lines. Where are my orders? Oh, duh. I didn't turn on the. Make sure your ATM is always on as well. There we go. Super confused for a sec. There we go. So now I have the individual, they're broken up, so I can move whatever it may be, right? So if it reverses up here, I want my stop loss to be under this candle. I'll just move it under here. And then let's say at one of my contracts, I want the first take profit to be taken at this body. And then the second one, I'll be aiming for, let's say, this high. And then in between these two levels, the trade will basically automate itself. So my trade is basically automated. I don't need to do anything else anymore. It's going to do its own thing by itself. That makes sense?
Yeah, that was pretty simple. I'll be complicating things. Thank you. So yeah, it's automated. So now if it hits that red line at the bottom, then it's gonna stop you out.
Mm-hmm.
Mhm. All right. But you
Yeah,
didn't you
that
didn't get triggered in yet because it didn't cross over the green line, right?
exactly. Yeah, because this is just a pending order. Until it
Mhm.
breaks that, then nothing's going to happen.
Right. Okay. All right.
And then once I do get in, what you may need to just pay attention to sometimes, depending how volatile price is, sometimes it might not fill you at that exact price. You might get some slippage. So it might fill you at like 76.20 or 76.30. So it might move the stop loss like a little higher or the take profit a little higher as well because it's based on your entry, the take profit and stop loss. So
Mhm.
you just want to just adjust it. So if it goes a little higher, you might need to adjust a little lower to, have it where it's supposed to be.
Okay. And that's basically just how you place the trades, but you use trading view for the charts, right?
Yep, yeah. I'm only
Mhm.
going to be looking at TradingView for like the actual charting, and I'm only using TradeAvate to execute my trades.
Mhm.
Some people
Uh,
like using TradeAvate's chart. I personally hate it. So
mhm.
I just keep everything there. And if you do want to, you can always connect your TradeAvate to TradingView and take the trades there. It's just not as advanced. So also reminder, when you're done trading, that exit at market and close, I clicked that like 10 times to make sure I don't have any pending orders because I made a mistake one day and I woke up and I'm like, what the
Mm,
heck is going on? But yeah, they also added brackets to TradingView, but again, TradeAvate, as you saw, is pretty straightforward. You click two buttons, you're in the trade.
mm.
Or TradingView, I guess you can get the DOM up and make it a little faster, but I find it not as efficient personally. So this little like these little four squares, you can kind of make your own bracket, as they say. I just can't really configure it to like the specific units that I want and like kind of break it up.
It doesn't
So
have trail stop either, right?
yeah, they don't have trail stop yet. So generally, you always want to be executing it on TradeAvate to get the more advanced, um, ATMs and
Mm,
settings.
copy.
Cool.
Thank you.
Absolutely. Let's see. Is Justin here? He wanted to go over the strat. Doesn't look like it. Angel, I don't see you here. Akil, don't see you. Robert, I don't see you either. Steve wanted to go over swing trading, but he's not here. Is Terrence still here? I saw him earlier. You might have, yeah, he left a little earlier. Trey, entries and exits. Trey, if you're here, let me know. Remember, if you want me to answer your questions, you have to be present, or else I'm not going to go over it. Isaiah, you wanted to go over volatility?
Yeah, if you can, how you're dealing with the volatility lately.
I've been super defensive lately. I haven't been trading as much as I usually do, just because I'm still trying to get like a comfortable read on the markets, especially on those like extremely volatile days. And the ATR right now is basically doubled. When I was talking to Sonos the other day, everything is similar in the sense that like if the setup is there, the setup is just the setup. Just the amount of points and stuff and such is going to be a lot more than usual. So let's say, let me go back if I could find this trade. Let's say for this W, right? What will the stop loss be on this? All right, this stop loss is 182 points, which is almost $1,000 on probably like 1,000, what, 1,900, something like that, on for one YM contract, right? I'm not gonna use one YM contract because I do not want to lose almost $1,000 on that trade. So let me get proper math. So 182, 910. So that'll be the stop loss. So YM 82 should be 910 or negative 910. However, I can just switch to MYM. Same thing, except is it going to be 1/10 the value, as of course you already know, roughly negative $91, right? So generally for the W, I don't want to lose more than $500 on this trade. This is probably the only trade that I up my loss a little higher than I would like. So here, we're just going to use micros instead. So I can use about what, 4 micros, give or take. Yeah, roughly 5 micros I can use on this in order to um, minimize my loss under the 500 that I'm comfortable with, or keeping it between 4 to 500. Depending on your account size and things like that, you may need to just skip setups entirely, or even just wait until volatility comes down, which hopefully it does, because ATR basically doubled in the last month or so. So if you're used to 50-point candles, you're pretty much getting 100. And right now, I think we're averaging about 150 to 200. Yeah, about 150 to 200 point candles now. So in this case, first target 358. Second target would be almost 1,000, which is insane. I definitely didn't catch this one, but we would just use micros in order to manage our risk more efficiently. So if you're using minis before, bless your soul, good luck. Your stop loss better be super tight, and you better have the best sniper entry of all time.
Those candles you're looking at, those 5-minute candles?
Yeah, these are 5-minute candles.
Okay.
And even for those who trade like strat setups like I do, you got to be mindful of the setups you take because that stop loss might be like 200 points. So you better size accordingly. That way you keep your losses kind of in the same realm as you used to before, just using micros instead. And if you are not comfortable with trading the volatility, just take a few days off. Like this, like I would average between 15, 20 trades a week. I've been doing maybe like, I think this week I did 11. No, I did 9 because some trades were like doubled up in the journal. And then I think the week before I did, I think like 8 or 5 to 8, something like that. So I haven't been as aggressive as before, just until I'm more comfortable with the volatility spike. Some people love this. I personally don't, but that's kind of the trader part, right? We kind of just have to adjust to what's going on. With the volatility being what it is now, it definitely makes sense why when I first started trading in 2020, people were like, oh, futures are scary. Because Brown was telling me this is what the ATR was like in like 2020. And then it kind of relaxed. And then it started ramping up again, as we can see now. So I started trading futures when the ATR for YM was like 500, maybe 600, if that, but around like 450 to 500. And now it's almost triple that. So, as always, just get accustomed to it, get more comfortable, go back to paper trading if you need to build the confidence and then go back into it. And one micro can go a long way. Like even in this single trade, right? Even to the first target at about 363 or 362 points, give or take. That's what? Uh, 50 cents times 181 bucks per micro. So they can definitely get you where you want to go. Sweet. I'm not sure if Whitney is here, but he wanted to go over futures. Maybe he'll come in the 9 o'clock individuals. Yeah, the 9 o'clock individuals are coming in now. So we'll probably get some others. Whatever other question you guys have, put it in the chat. Welcome, Angel, and whoever's iPhone. We got a second iPhone in here.
Thank you.
Uh, Angel, you wanted to go over exiting while already in profits and taking lots of trades throughout the day. Can you kind of give me a little more info about that?
Yeah, so I've been tracking how many trades. I'm fairly new to trading. I've been tracking the amount of trades I've been taking, and it seems like been taking I was taking a lot. I think around the time I signed up, I think I was taking somewhere between probably like 8 to 12 trades within the same day. And
Mhm.
now I've cut back. I think Thursday and Friday I cut it down to like maybe 4 or 5. And I would buy multiple contracts as far as like the exiting while I'm in profit, because I would buy multiple contracts and like on one or two of them, like say if I bought three, like on one or two of them, I would easily hit 30, 50%. And I would want to let that last one hit either 100 or 150%. It would end up reversing on me and I would take a loss on that. It almost kind of like erased my gains that I had with the first two with how I lost the third one.
Mhm. Um, when you size in with the multiple contracts, is like the dollar amount similar or is it different? Like, do you put like 200 in one trade, 400 in another, 100 in another?
Yeah, they're fairly similar in size.
Gotcha. You mentioned that a trade was 150% and then you let it go back to negative.
No, so the goal was to get to 150 since my first two had already hit. Like, say, for example, one had hit 40, the next one hit 80, and I was shooting for the last one to go to 120. And since I was so confident in the direction it was going, even though I had slightly pulled back,
Hmm.
I was thinking we were going to come back, and then it's the end of the day, and it turns out we didn't come back.
Gotcha.
Yeah.
One thing that I would definitely say, and clear it up for me because I'm not super clear yet. When you're when you are targeting whatever you're targeting, 40, 80, 150%, whatever it may be, are you basing that based on like let's say price action and the chart or are you kind of just going into the trade and be like, all right, I'm going to take the first one off at 40, 80, 100, whatever.
So now that you asked the question, that's a good question. I have set entry targets and the exit targets, and I guess that's actually one of the things I was reflecting on this week. I've never tracked how much higher it went after I've already exited. So I think that's one of the things I want to work on going into next week. Like if I how true were my levels? Like were they accurate or yeah, things like that.
I would definitely say if you can get clear on like your targets and things like that and base your take profit and stop loss based on that. So
Mhm.
for example, let's say this trade right here. Let me just bring it up on SPY because the futures and ETFs are basically the same thing and you could take the same setups. So this is on SPY. Let's say, so our stop loss will be under here, about almost $3 and change. And second target will be up here. And let's just use this red body as our first target. And let's bring up an options chain so we can kind of get an idea of what we would do. So let's bring up SPY. Tomorrow is the 14th. Let's just say that you're doing a zero DTE, which I personally never would trade. And let's see, got to get this price. Let me exit this real quick. So the first target is 521. Entry is about, let's say, 516. So $5 away. All right, let's say, so 520 strike in this case. I generally base my strike prices depending what I'm trading. I usually do like at the money or in the money. But for a setup like this, I'll probably use my strike price near the first target. So let's bring up a long call, and I need the chain data. 14 calls are on the left side, so we're looking at uh, the price is probably going to be a little off, but for the sake of the conversation, let's just say that the 540 strike is the 520 strike because the numbers are crazy for the in the money.
Right.
So the bid is 403, the ask is 410. So we can assume, just to make math simple, that we're going to get at 4.00. Let's say we got filled at 4.00. And let me just write this down so we don't need, so I can move this big thing out the way. So SPY, again, we're pretending this is a 520 strike call. Delta is 0.37. Let's just round that up to 40. And then entry is 4.00. Data doesn't really matter because we're going to be in and out the same day. So based on this first entry, it's about $5. So just take the delta, multiply it by 5. Once it gets in the money, it's going to be worth more, but we're just, getting an approximate amount. So 5 times 4, 20 is basically 50% gain at the first target. Let's go back here. First TP, 50% gain approximately, or pretty much at 600 gain. And then the second target up here, which is roughly 12. So that would be, so 4.80. So that would be, uh, it would be worth 8.80. Yeah, 8.80, 4.80 gain. What is the percent? Let's bring up my percentage calculator because I don't want to do it in my head.
Or slightly under 150 is it?
Yeah, 120%. So we can see here that I'm basing my take profit and such based on price action. And just for the sake of the conversation, the stop loss is 3. So that would be stop loss would be 1.20, $3 times 4, which would be a 30% loss. 120. Oh, I already added it there. 120 loss per contract. So 30% loss, I'm risking 120 per contract to make roughly 480 per contract. That's pretty good if you ask me. Looks like right here it almost came and hit it. This pullback probably would have killed the premium a little bit, so it might not have been fully 8.80, but just approximate values. So we can see using this approach, we're maximizing the trade because we're basing it based off of price action, as opposed to maybe 40% was like over here. So you're missing an extra 10% just using like fixed take profits. And you might have said, I want 100%, but you missed an additional 20%, not waiting for that target to hit or whatever it may be.
Okay.
And once something hits your first target, move your stop loss up to break even or in profit. So it's a risk-free trade. We don't want to make money on a trade and then lose money on the same trade. Kind of counterproductive in my opinion.
Right.
So that's what I would probably do if I were you. And that's what I do as well. I just base the exits and such based on price action because the chart is getting me in. The chart needs to get me out as well. And that helped me a lot maximize more of my trades. Because I used to do the same thing. Like I'm going to take some off at 30%. I'm going to take some off at 50, 60, 80, etc. But for this, now I'm getting more return based on the setups that I do take when I take them.
Okay. So base have targets, essentially price targets.
Yeah, because if the chart is getting you in, then the chart also needs to get you out. Because if you like kind of arbitrarily just use like take profits and stop loss, kind of just random, to me, you're leaving money on the table and potentially even letting winning trades go red earlier or even getting out of winning trades earlier. Because if, let's say, you're like, I don't want to lose 10% on this trade, let's say if it pulls back halfway into the stop, that might be 10% right there. So now you basically lost a trade that ended up being a winner instead of basing your stop loss based on the chart. Now, since I basically, when I first started, I didn't use like any fancy calculators. I kind of just did the math in my head. I kind of just eyeball it. So if the delta is $37 and the stop loss is $3 on the chart, I can assume I'm going to lose, 37 times 3. Just multiply the delta by the dollar amount, and you can get a good idea of how much you may win or lose.
Okay.
And
All right,
that
that's really good.
that way you can, get an idea of how much you want to lose. So if my max loss on a specific trade is $360, then I'm only going to get 3 contracts. Actually, yeah, 3 contracts for this trade will be my max, which would be about $1,200. and then I'm going to be losing about 360 if it goes against me. So it's within my $400 loss range.
Okay, awesome, perfect.
Definitely try that out and paper trade it. Especially if you're new, whatever you are trying as a new trader, definitely paper trade it. You don't want to lose a lot of money or money at general, in my opinion, practicing something new.
Okay, I'll make sure to note that.
Sweet. Great question. All right. Uh, if I were to start over, how much would I fund my account with, and what threshold milestone would you increase per trade? It depends. So it depends what I'm trading. If I'm trading futures, you could just do like $1,000 if you wanted to. Um, just because I'll probably just use like one or two micros maximum. With the volatility now, I'll probably just use like one or two depending on the setup, but usually probably just one. If I'm trading options, anywhere between 1 to 2,000, assuming I didn't have that much to start with. And then my setups are basically based on percentages. So I'll use 10% per trade. With $1,000 account, I'll probably be a little more aggressive and use 15% of the account per trade. So basically $150 a trade. And I'll just continually do that as I grow and compound the account. That way you can get used to the bigger numbers on the profit side and the loss side. You don't really want to go from, let's say, if you go from 1,000 to, let's say, 1,500 and you're using $100 a trade, now you're using $300 a trade because you might be thinking, well, I'm going to make more profit, but are you mentally ready for the losses to come? Right. But yeah, that's probably what I would do if I was like brand new, didn't know anything. If I knew what I knew now, I'll probably start with a lot more, obviously. But if I were brand new, 1,000 would probably be my starting point. When I first started, that was near what I started with as well. I started with like 200, and then I had like 500, lost half of that, and then I hit some good trades, and then I guess officially started like at 1,000 or 1,500 around there. Granted, it was 2020. You made money buying anything, so yeah, definitely 1,000 would be a good place where I would start with and just use one micro, and then every 400 to 500 bucks that I would make, I would add like an additional micro. But again, staying within my loss limit, right? So with one micro, if I'm trading YM, I'll probably limit it to one until, with the volatility now anyway, I'll probably limit it to probably one micro until I double the account to 2,000. And then I'll probably look to using two because I like for futures, it's a little different than options because it's not really percentages, right? It's kind of like points. So if I'm risking, let's say, maximum of $100 a trade, which will be 200 points on for one YM contract, then I only have 10 trades until the count is done. That's within my risk tolerance because my setups win a lot more than they lose, depending which setup I take. I'll probably be a lot more pickier. Like for an account as like with 1,000, I'll probably only take the W setup and probably the 15-minute orb, like the regular version, depending on the stop loss and such. So every 500 bucks to 1,000, you could just add an additional micro. And then if volatility decreases, you can always add, let's say, two micros if the loss is 100 or lower. That way you still keep your 10 trades before the account is done. Or if you're at 2,000, now you have 20 trades in a row until the account is done for. So there's a lot of different ways you can tackle it, but that's how I would do it. Key, you mentioned like how I day trade. Can you give me some clarity on your question? Like, what do you mean exactly? Like, how do I day trade? Like, what my setup looks like? or what?
Yeah, just going over how you choose to possibly take entry, and I know you go out for the 4 hour. Just want to know, do you just chart the 4 hours after for regular hours after the trading day is over, or is there certain things you look for entry as far as signable actions?
Um, it depends what I'm trading. Generally, I really just trade Tesla for options since I mainly trade futures. I don't like to babysit both. So taking the 4 hour entries work better for me because I just, get in the trade, set my alerts, and then manage the trade when it hits those targets or stop loss. Um, but in this case, I would generally be looking for I usually prefer inside bar setups. Granted, Tesla likes to gap up and down a lot. So let's say, for example, right now we have a 3-1 setup. I'm hoping that tomorrow we open up as an inside bar so I can get in as soon as that level breaks, right? Um, if it gaps up, then I'm probably just gonna skip trading options that day. If I am enticed to trade options, then I'll just go on the 5 or 15 minute and take like a 15-minute orb instead on Tesla. Contract wise, just because the volatility is what it is now, I don't really trade Tesla Monday through Tuesday, Monday through Wednesday as much as I used to because it's a lot more expensive. So I'll usually limit my Tesla trading to Thursday or Friday just because the contract is so expensive. It's a little easier for like if you're trading, let's say SPY or QQQ or IWM, because you can get 0 DTE or you can get 1 DTE or what have you, or 2 DTE. So the contracts aren't that expensive. But yeah, pretty straightforward. I just mark off the high and low. As soon as it breaks to the upside, I'll take that to the long side or the downside. In some of them, I would use discretion. For example, these two 4 hour candles is basically one daily candle. So that's basically the daily high that we have, this low and this high. So if I am inclined to take this to the downside, I need to be mindful that the day is still trading inside bars. So I might get caught up in chop. For example, on a Friday, for whoever took this to the upside, we were still trading inside day because it didn't break. Um, it didn't break Thursday's high on Friday on the first 4 hour candle. So while you could have taken it, depending whatever your targets may have been, you would have probably made some decent money. It moved what? About $3 and change in your favor. Would have been a winning trade for me. But always be mindful. There are some candles that you may not want to short, or some candles that you may not want to go long on. Like, let's say after, actually, let me get a better example for you. There was a day that I was showing somebody on. Let's just use where we're currently at as an example. So if we get a big, strong bullish candle to the upside, I'm probably going to be against shorting it just because of the strength that it showed. Granted, you might still get a good setup. Like this one here, opened up here, triggered to the downside, and you would have made a good amount. Pretty much died 13 points. So always use discretion. I'm usually against shorting really big, strong moves and really big, strong candles, personally. When it comes to contracts at the money, perfectly fine. Um, I prefer at the money. You can go a little out the money, as I mentioned earlier. So if your first target is $3 away, you can choose a strike price of $3 or even $4. General rule of thumb, whatever the ATR is, you don't want to go more than half away. So for Tesla, the ATR is $25. probably not going to choose a strike price more than $12, $13 away. I'm going to stay within that 50% area. That makes sense? This is an example here on Tesla. We have pretty much huge candles or big strong candles gapping up, all that good stuff. This candle went two down, then actually no, this candle gapped up and then went three down. I'm probably not gonna short this huge candle here. I'll just avoid that personally. And then we have that nice TTO. Let me get rid of this fib. We have this nice TTO that printed on the 4 hour, got you in right here, hit basically both targets, completed the TTO, then got sold back down. Let's see. I think all of it. I would say all of it, Sam, because for me, like back testing new setups or just back testing setups in general, like when I was collecting all the data for all my setups, back testing helped give me confidence that the setup is actually valid, right? And then I will go to paper trading to actually execute the trades. And then once I'm confident in doing that and what to expect, see if there's any slippage, things like that, then I'll go live for like a week or so with like one contract to just get like comfortable using live money. And then once I'm confident actually taking the trade live, and of course all the data that I collected, then I start using my regular size, like 3, 4, 5 contracts or whatever it may be, depending the setup. So I would definitely say all of it helps. I've never used TradingView's backtester. I don't really know how to use it. I just did everything manually, which may have been a lot more tedious than I needed it to be, but that's just the way that I did it. So definitely all of it helps. Sweet. What other questions do you guys have? Put it in the chat, come off mute, whatever you want.
Busy. Do you know people that strictly trade strat concepts as is? Like I know you're a little bit more like you trade the strat, but like within the context of your own setups, like the W model or things like that. Do you know
Mhm.
people that trade specifically like, they see a 2-3, they'll take the 2-3. Um, Obviously like probably like in the direction of the trade, for example, but like they're a little bit more kind of mechanical in that sense.
There's a guy in one of my mentors group. His name is Trade Maker. He trades like that. Like he'll take like two threes. I think he usually prefers like three candles on the 15-minute time frame specifically. Um, I think 2 1 2s and some others from what I've seen him do. I just like to tie my like strat entries based on specific models. Now, when it comes to like the higher time frames, like the 4 hour, I'm kind of a little more liberal. Like for Tesla, I'll take the 3 1 2 up or down, regardless of whatever is happening. But he's probably the only one that I know that like just takes strat like in and of itself.
Okay, there, thank you.
Of course. I don't think Blair is here, but I think Alex and Sarah Strat Sniper from the Strat community, I think they trade futures with the Strat like almost exclusive. I know they're very picky. At least I've heard from Alex or for somebody that told me that Alex is super picky with his futures trades when it comes to Strat. But I know, at least from what he's told me, for the most part, is just regular Strat trades, time continuity, things like that. Could you go over price action as far as what signals to exit a trade? Um, is the question, let's say I get into a trade, based on price action, like when would I get out of the trade? Is that the question?
Yes.
Cool. So I'll give you four examples. I usually just talk about the three, but I'll add Brown's method as well. Uh, let's use this 3-1 as an example for tomorrow on Tesla. And I'm going to use this, where is, I'm going to use this box as a fake candle to the upside. So four different ways you can get stopped out of a trade. The first one, so the candle that triggers you into the trade, to me, that's a trigger candle. You can put your stop loss right under that candle. So basically right over here, under that candle. Or you can use 50% of the previous bar or the setup candle, which is the inside bar, as your stop loss. So that could be my stop loss there. Or if you want to be adventurous, you can use the setup candle as your stop loss as well, like this. So those three ways you can use your stop loss. One thing that Brown taught me, I rarely do this, like every now and then I would, but for enforced trades, like anything that's like a hammer or actionable signal, then a trigger, or like a 3-1-2 up, 3-1-2 down, 2-1-2 up, so on and so forth. Once it triggers you in, it should just head straight to the target. If it comes back to entry, the trade is no longer in force, and the chances of it being a losing trade increases. So for him, if it comes back to entry, he's just getting out immediately. And then I think he says he might re-enter if it breaks the level again. But generally, if it comes back to entry, he's getting out immediately and just taking that small little L because the trade is no longer in force. So you can do those four things and see which one works better for you. Depending depending on the setup, I'll use either the trigger candle, 50%, or the setup candle as my stop loss. For example, let's go on SPY. All right, so we have this Momo shooter set up right here. Nice big candle, nice big shooter, and we're just taking it in the direction of the trend. This is probably maybe one other setup I'll do, but like this is one of the setups that I'll use the setup candle as my stop loss. So the bottom of the shooter is going to be my stop loss. And then my take profit would be, previous candle lows, so on and so forth, etc. Maybe fibs if I have it. Or you can just trail the candles until they reverse on you to maximize the trade. So in this specific Momo shooter setup, I'll use the top of the shooter or the top of the setup candle as my stop loss. Look, yeah, I don't think he moves his stop loss to break even. I think he just exit the trade, like period, like as soon as it hits entry. I'll have to ask him because we spoke about that like 2, 3 years ago when when I booked the session with him. Cool. Anything else you guys got? If not, we can wrap up in a bit. And if you don't have anything, I'll give it like a minute or two, and then we'll go from there. Hey, absolutely, B. Looks like no more questions. So before we wrap up, what was everybody's biggest takeaway, or what was something that you learned today?
My bad, Evan. I do have a quick question.
Yep.
So just to make sure that I'm seeing this right, on Top Step, the trailing stop. So if you put like a trailing stop, like at whatever ticks that you want it at, whenever it does hit that click that whatever that is, it going to continue to just trail it from there, and if it goes back to that, then it'll stop it.
Let me actually bring that up because I've never used the trailing on Top Step. I just did like the fixed, take profit and stop loss. Let's see. I've only just used like the profit and the stop loss brackets.
Yeah,
If they do have the trailing, I personally have never used it.
I just seen that just now, honestly. So I was like, I wonder if you know what exactly how to.
Oh, there we go. Yeah, the trailing stop. Yeah, I've seen the trailing stop before. I've just never done it. But looking at it, it looks like essentially the trail distance, which is basically the ticks. It
Mhm.
sounds like if let's say you set it to 40, every 40 ticks, it's going to move your stop loss automatically.
Okay, okay,
So let's say if you have five and you want the last two to kind of do its own thing, you might need to like manually exit out of the original trade and then leave like the last two just hanging out and doing its thing.
okay,
But I'm usually just manually because with the strat, it'll take too long for me to kind of adjust it, be like, all right, this one is exactly 52 points as a stop loss or whatever. So I kind of just like manually adjust it. But
okay. You
prof,
just seen it. I was like, I just wonder if you ever used it before.
yeah, not on Top Step. I have done it on Tradeovate just because it's a lot more simpler and I can like edit it to exactly what I want.
Hmm.
For Top Step, it looks like it's just, for at least from what I'm seeing here, it looks like it's just like either you're either gonna get like regular stop or your trail stop. And you know, every setup for me is different. The take profit and stop loss, so I can't necessarily be like at a fixed level.
Right. Okay. Thank you.
Of course. Sweet. All
I
right,
guess, sorry. Same. I got two questions if you don't mind.
go for it.
Thanks. The first one, have you ever been in a scenario where like there's a period of time where your setups are just not working based on like how the market is operating or something of the sort? Like, do you keep trading them? Do you retire them for a bit and keep tracking them and bring them back in at some point? Or like, how have you managed that if you have faced it?
Definitely have in February when volatility increased. So for one, I set up the 15-minute orb retest, basically just retesting the 15-minute level. It worked very well. And then once the ATR increased, I was basically losing, like I think at the second half of February, I pretty much ended red for the last 2 weeks of February. I think it took maybe five or six retests, and only one of them won. And I'm like, all right, something is going on because this setup is usually winning a lot more than it's losing. And because that specific setup uses like a fixed take profit and stop loss, with the volatility increase, I haven't done the research yet on what is a new take profit and stop loss to kind of use for that setup. So I've retired it for now. I'm still keeping track of it. I know some people in the group still trade it. They just increase the stop loss. I don't know what amount they're increasing it by, but I personally just avoid it. That's why I'm just taking the regular 15-minute orb. But I'll keep on monitoring it. What I'll probably have to do is do some research now on what may be a better take profit and stop loss because I would use 50 points on YM, and that's like a quarter of a candle now.
Yeah.
So definitely retire it for now. I could bring it back. Being transparent, I'm just lazy to do the research for that specific setup again. But I'll spend some time just to see what would work better moving forward. I know for the original one, the VIX will need to be under 20, and the ATR for YM will need to be at least around 700. So until that happens, my original um, levels and stuff for that setup, I can't use until I get the new data on it.
Okay. And that makes sense. Well, thanks for explaining. Um, my second question was around yeah, how much importance do you place? I know that like maybe because you trade specific levels it may be less important, but like do you ever try to keep track of like maximum adverse excursion or favorable excursion and like some of the deeper trade per trade stats or overall system like profit ratios and stuff like that or
Can you explain the excursions part that I'm not familiar with?
yeah, so adverse, like how much does a trade go against you after entry? And favorable, how far does it go, past your profit target before it would return?
Gotcha. I did something similar. Like for example, the retest on the back testing, I saw on average that if it hits more than 50 points, it's probably going to be a loser. And if it hits at least 50 points, it's probably going to be a winner. Um, I do that sometimes for some setups. I don't really keep track of it that much just because I kind of just take it as it is. Especially for that trade, I always aim for just 2 to 1 or 1 to 1 for the first contract and then, 1 to 2 for the second contract.
Okay.
And then I kind of just left it there. But based on data that another student did for that setup, the um, what was this thing? The program told us that on average, we can leave a runner for 3 to 4 R, and it would usually hit um, if there's like a gap up or things like that. I forget the specific criteria, but it
Mhm.
told us that it's probably better if we leave like a runner for 3 or 4 R to just maximize the trade when it does appear.
Okay.
But that's probably the extent that I have on that specific data. I don't really pay attention to it that much. Not that it's not important because it is. I just personally just don't.
Yeah, okay, that's
Uh,
fair.
You've added something else for me to add to my criteria now,
You're welcome. Thank you.
of course. Sweet. As always, thank you guys for coming out. We have these every second Sunday of the month. Next month, we're going to go back to 8 p.m. I just thought I couldn't make it today for the 8 p.m., so I did it at 9, but we started a little early once I got here. So yeah, every Sunday, 8 p.m. Eastern. You can always sign up for months in advance if you want to, just to have it there and like remind yourself. Next weekend, every third Saturday for now at 8 p.m. Is it at 8 p.m.? Let me double check because I recently just switched it from Sunday to Saturday. I think it's 7 p.m. So every Saturday, 7 p.m. Eastern time, we have pretty much this similar thing, but for like other groups that I support. That's on YouTube though. It's not on Zoom. So YouTube, 7 p.m. You'll probably see a live pop up in tomorrow or Tuesday. And I will see you guys throughout the week and next week for the next one. What we went over today, definitely practice it and give me your feedback on what's changed, what you've improved on, what might have gotten worse, whatever it may be. And we'll go over it. Other than that, enjoy your Sunday, and I will see you guys this week.